Sanjay, always great to see you. So we were just talking about Andy Jassy's first year at Amazon. So maybe within the context of that to start, the biggest risk that I keep thinking about in the second half is that the consumer runs out of gas, almost literally. Debt rising, savings dropping, prices stubbornly high. When do we see whether tech is getting influenced by that, perhaps even through earnings guidance? Is there a particular bellwether that you'd be looking at?
Good morning, John, Deidre, and Carl. Thank you for having me on. Yeah, I think the wise approach would be it's sort of like the story of Joseph in the Old Testament. We've had 7 years of harvest and then 7 years of famine. We've had 13 years of incredible harvest since 2009. My advice to companies is to plan for things going further south and prepare for the worst. The only thing that's going up right now is inflation and price. Everything else going down. Now, it's not quite as bad as 2009 when the S&P 500 went down 50% and NASDAQ 75% plus, and same in 2002. But I think if you are a private company or a public company, those glory days of just growth without a path to cash flow positive are over. If you're a private company and you're looking for skyrocket valuations during your middle to late stage with funding rounds, you'll get a rude awakening when you either go public or when you go for your next round. So everyone's got to get the memo that profitability is really what counts. And I think it's not all doom and gloom. Great companies are formed during recession. And I think when you look at 2000, 2002, you had companies like Salesforce and Google that were formed. 2009, companies innovative like Uber and Airbnb. Yeah. So I'll be watching the next few weeks for pre-announcements this week, how the earnings of the cloud companies, security companies shape up in July and August.
Well, it looks to me like a lot of e-commerce names have suffered in this market slowdown a lot more than the big enterprise software names have. So I sort of wonder, and of course, Amazon's got both, so maybe you can address that within the context of Amazon. How likely is it that we start to see some of the follow-through effects of a slowdown coming more to the enterprise software players?
I would argue we've already seen some of it. I mean, of course, there have been ones when I look at, I put out a tweet a little later today about, the S&P 500 and NASDAQ and the top 100, 200 names in the tech space, how they've done. Companies like ServiceNow, Palo Alto Networks, a few of the security players have done reasonably well. But if you look at the high flyers that were valued probably a little bit irrationally, Snowflake, Datadog, they've come down quite a bit. Now, probably at the valuations they are today, they're probably the most, they've got long-term potential. Don't get me wrong. These are incredible companies, but their valuations were skyrocket. I think the same thing. If you look into the .com and the 9/11 crisis, a lot of these B2B marketplaces and these .coms that didn't have a viable future, they collapsed. The e-commerce segment had obviously an incredible pandemic surge. That's not sustainable. And your segment just now, John, with Andy Jassy spoke that. But I'm still very bullish on Andy Jassy and his future. Everything in their world of Amazon takes 5 to 10 years. If you read his shareholder letter, it's an absolute classic, just like all of Jeff Bezos's letters. And he talked about innovation and the principle of really also focusing on the employees. I'm very bullish on their future in the long term, especially businesses like AWS.